we're going to be dealing with, or another, we're going to be discussing accounting basics things or principles, which is one of them, which is accounting equation. Accounting equation, whereas you remember it says assets is equal to owner's equity plus liabilities. Assets is equal to owner's equity plus liabilities. That is accounting equation. So when we start by assets, remember our assets in terms of the accounting equation, our assets decreases on the credit side and increases on which side? On the debit side, meaning this side we have plus, and then on our debit side, and then we have minus on our credit side. Then what it means, our asset is being increased on the debit side. On the debit side, then what increases our asset? It is what? Cash receipts journal. Because whenever we have received something, or another, whenever someone have deposited an amount of money to the business, that is an asset which is on our debit side. It increases. And then what decreases this thing? It being decreased by cash payment journal. Whenever we are taking money, or another, we are paying someone using a bank, meaning our assets as the business decreases on which side? On the credit side, meaning this is an unfavorable balance. This is an unfavorable balance. This is a favorable bank balance, or another, this is a favorable balance, and then this is an unfavorable balance in terms of the asset. Then we have owner's equity. Owner's equity, it's what belongs to the owner. Owner's equity, what does the owner wealth to the business? Remember, between these two, there is a GAAP principle which is being followed, GAAP GAAP principle, which is money, and business entity rule. What does the business entity rule says? The financial affairs of the business must be kept separate from the financial affairs of the owner. Financial affairs of the business must be kept separate from the financial affairs of the owner. That is business entity rule. So this is our credit side, this is our debit side. So this account, another, our owner's equity increases on the credit side and decreases on the debit side. So it means it does the opposite of what is being done by the asset, which is, this is in accounting. So this is a double entry principle. Remember, double entry principle is very much more important. A double entry principle is very much more important. What it says, it says account debited must also be the account that will be credited.